All right. Shawna King, thanks for doing this with us. So Shawna and Greg, I don't believe you've ever met. So why don't you guys just introduce yourselves and we'll get started that way. Shawna, you like to go first?
Yes. Hi, my name is Shawna. I am a broker with King Realty. I've branched off on my own for the past 2 years now, and I have 15 agents under my belt on my team. And I love helping buyers and sellers and mentoring new agents.
Awesome. Well, I'm Greg. Nice to meet you. I am Mark's personal assistant at times, but mostly his insurance guy.
I love it.
So Greg and I went to college together. He likes to call us potluck roommates. So we were on baseball and we got placed together as roommates.
I love it. And you do home? Do you do auto too, or just home?
So I do. I'm a broker, so my majority of my business is actually commercial. But Mark is my only line into the personal world for home and auto. So he gets the white glove treatment in terms of helping home buyers.
I love it. That's wonderful.
Sorry, I'm trying to text somebody back here. So yeah, are you out of town, Greg?
No, I'm downtown right now. I had a coffee meeting at 9:30. That's why I asked to push to 10:30. She hadn't sent the calendar invite yet when you asked me. So when I said yes, I double booked myself.
Well, I love your background. It looks like a city downtown.
Yeah, it's better than my home office.
Yes.
Yeah. Yeah, nice.
As long as this homeless guy doesn't get in the picture behind me.
He can come out. He's probably got something to say. Well, Greg, Shawna and I, Shawna likes to talk to me a lot about different things going on in the markets, very active, researching things, staying up on what's going on. We talk about all the programs, the pros and cons, a lot like what you and I do. And so that's kind of what we want to talk about today. Shawna and I kind of outlined a few things that she really wants to talk about to make sure that, her clients and potential referral partners and stuff really understand what's going on in the market right now, because one of my favorite questions, Shawna, to ask, and I'll probably just start with that because it kind of leads into what we talk about, is so many people are just getting blown up with cold calls, and a lot of it's not always the most accurate stuff that they're saying, or very truthful sometimes, super misleading and deceptive, especially with rates right now. Buyers are probably getting a lot of cold calls saying, "I'll say, let me get you a refi. We're going to save you so much money." And then they don't tell you what that costs. They don't tell you how they roll things in, change your term, do this or that. Like they may not say the whole picture. So just because someone has this crazy, awesome sounding cold call or marketing, material that makes it look like they got the best thing ever, it may or may not be. And so one of my favorite questions is, who cold calls you? What kind of calls are you always getting?
Lenders saying the same spiel, promising programs that, may not work for the client, may not be in their best interest. So we always have to get to the bottom of it. How are they actually paying for that grant program or down payment program? So we need the facts.
And so, Shawna and I tried to do a little bit of a webinar for her folks about that. I'm always all over the place when I talk, so I'm not the best speaker, but it's crazy because people will say something and they're like, "Hey, we have this free, 0 down payment." And it's like, no, it's not 0. By the time you add up all the fees on the back end and how they're locking you into it, that's more than the down payment. So what we've talked about a lot is just like, let's switch up the way we think about all this. So if we're truly professionals and advisors, we got to let people know a different way of understanding all this. So one of the big ones is we talked about budgeting. So what's a budgeting reality of a down payment? So do you want to take this more expensive loan that actually has a higher monthly payments, because it's always a trade-off. So you take the free down payment assistance or the grant. Now, there are some grants out there that is legit and it's free and there's no real strings attached, other than you have to work with one specific bank because it's called a Community Reinvestment Act, because they've had so much fraud and lawsuit losses over the last decades that they have to reinvest so much money in a certain area and meet quotas. In those cases, then it is kind of legit free money. But in a lot of the cold call environments you're getting, it's not really free. So how do we create a down payment? How do we create, a better loan application so that you get offered preferred terms instead of having to think you have to go into this bucket of assistance where you're getting super unfavorable terms? So budgeting is a big one. Shawna, you want to talk a little bit about some of that? I know one of my ideas is just talking to people about spending. So as a lender, I'm always looking at credit reports. I'm always analyzing people's income and debts, and you just realize how much money adds up. So just, credit card balances right now in the United States, I'm looking at some notes I've got. $6,700 is the average credit card balance for someone in the US. Okay. And then the total credit card debt is over $1 trillion. And so people are spending so much, and I can get going in all sorts of directions, but that's called consumer resiliency the last couple of years. The reason that the Fed didn't want to bring rates down is because people were spending money and companies were making money. But it's all came from credit card receipts. So do you need down payment assistance, or do you need to stop spending so much money on your credit card on a daily basis?
Right.
So Greg, you're downtown right now. Look around. How many businesses are around you in a 360-degree angle where there's a line of a couple people about to spend $6 to $15 on coffee?
I mean, I just did that.
Yeah.
My coffee was $4, but
yeah.
I mean,
you must not have gotten the Halloween pumpkin.
No, I drink man juice. It's black coffee. That's it. But no, budgeting's the big thing me and you've always talked about. Is
one more quick stat. $5, $5 to $6 a day on coffee. If you just figure out a different way to do that, you could save up to $2,000 a year towards a home purchase.
Yep, they really
cover your insurance premium.
Yeah. And paying in full, and then don't have an escrow account. And then now we're really starting to talk about how the numbers work, because escrow accounts overly inflate your monthly payments just because they have some algorithm that says they should collect more. So yeah, anyway.
I recommend that my clients get on a savings plan right from the beginning when they're thinking about buying a home. I like to have a strategy session with them and talk to them about how much they can put aside every month towards their down payment and their closing costs. And I really break it down, how much they're going to need for both of those. They're going to need down payment and closing costs. And a lot of times they don't understand the closing cost piece of that. And so we really have to start building that savings. And I recommend that they get a separate checking account or a separate savings account just for the home purchase. So they really need to be planning a year in advance before they buy, unless they have money already saved.
And that's a great thing too, right? So a lot of people will come to me, and say, hey, I want to buy a home. I saw this home on the market. I really love it. Can you help me get pre-approved? Well, you're kind of already behind the curve if that's your statement, right? Going and looking at homes and falling in love right away and then trying to figure out your budget is tough. So there's no such thing as being too early or too prepared when it comes to trying to figure out, the best way to buy a house.
Right.
And so if you're saying you're meeting with people and talking to people a year out, then that is such a benefit to buyers, because almost everyone else, the Zillows and the different places you get leads and calls, and a lot of in our mortgage side was trigger leads, right, which just got banned. They're picking up a phone number because they got their credit pulled and saying, all right, I heard you're within 30 days that I could get a check. Let's do this. Let's work together. You have to really, really make sure you put a good team in place to have a real strategy so that you actually understand things. And then maybe you don't like me, fine, but at least have a plan. Don't work with me, work with someone else, but have a plan and have it early.
Right. And yes, and start building their credit. You know, there's things they can do on their own to build their credit and start paying things off or you know, getting things removed if there's things that are not correct on their credit, they can be working on that because that is a process as well.
Well, and the other thing a lot of people don't understand, depending on how deep you are in the industry or, you know, what piece of the application you're on, whether you're the agent waiting for the approval to go look or lender or insurance waiting to just close, you know, just because you make money and you have a credit score does not mean that you are going to get approved for a mortgage. I think my internet is a little slow, but we've had so much stuff going on out here with all these new builds. They're tearing up all the towers and stuff, and every now and then my internet will just go out.
They have to have good income and documented income and
boom,
so
documented. Mm-hmm. Documented income. And a lot of people think that they're a salary employee, but they're really an hourly employee. A lot of people think that they're not contracted because they get regular checks, but they're actually just getting regular checks, but also contracted. And so if there's a 1099 word in your world, you got it within the last 2 years, even if it's not now, if there was, all that kind of stuff adds up. And that's the sort of thing that you iron out early. While you're ironing out your budget is also, am I going to make it through underwriting? Am I ever going to have earnest money or inspection money at stake because someone's pushing me to go buy a house? So anyway, Greg, you want to mention, I cut you off earlier, budgeting.
Just talking about the budgeting standpoint, kind of off topic, but on topic. I would love to get y'all's opinion on the D.R. Horton lawsuit. Because this is something that me and you have harped on for 6 years now, and finally somebody decided to sue them over it. But I don't know how much ground it holds because it's like you didn't know, you didn't ask the questions,
they probably didn't filter telling them ahead of time. Because if it was my client, I would be advising my client to be prepared to pay those taxes, those property taxes, because they always go up after the home's built.
I've had a real estate have that happen to herself for her own home, and she was like, "My taxes went up $4,000 this year," and I'm like, "Well, talk to me about what you think happened." She was like, "Well, it's a new build," and I go, "Did they not do the taxes for the building? They only did it for the property." She goes, "She didn't even know what I was talking about," and I'm the insurance guy. Yeah,
these people. So I have a lot of opinions about new builders, specific ones. And so I'll just try not to say anything crazy because you got to work with people in our area. But D.R. Horton doesn't want to work with anybody else. They won't let other lenders in. You know, they try to corner the market. So do I think there's opportunity and find something? Probably. But can they prove it? You know, I don't know. But no one ever thought that this NAR thing would go through either, that they would lose that. But they lost that hard. So
right.
Yeah.
So who knows? But I mean, hopefully it just creates more transparency with the process, because that clearly was not done right for a lot of clients.
Yeah. But what I would like to see the lawsuit be is not so much about just the disclosures and everything, but the fact that they're like forcing people to do something their way and not what's actually best for the client.
Right. Right. They force them into that lender, and that may or may not be in their best interest.
And sometimes it is because they're giving them crazy incentives. But what if I already had a better base level pricing than them, and then you gave me an incentives and I was this much better?
Right.
So it's really tricky, and they have so much money. I just read an article that they're building another big ass building in the Panther Island project in Fort Worth. And so they have a lot of, big companies have a lot of influence. The billboards say they're #1 home builder. So, that's a really heavy, powerful industry. And, it's going to come down to who's got the better lawyer. It's not so much about who's got the better case.
Well, and they're buying down the rate, but a lot of times it's a 1-year buy down, and we don't know if rates will be better in a year. And if they bought last year, they're still that 1 year is up already, and they're still with the higher rate right now. So their payments are jumping up because that temporary buy down expired. So
from what I read, though, it's more about the disclosures. Like they were quoting payments without including the escrow numbers.
Right. But I'm just seeing another issue with them is that temporary buy down is not long enough because the rate is high.
So the main issue with them or anybody else that we might call competitors out there, a lot of times is just inexperience and a lot of turnover in these big companies. So
Right.
you're building a house, it might take 6 to 10 months. There's a lot of cases that a lot of builders, even ones that I've worked internally for in the past, where your salesperson might have changed 3 times from start to finish on the home.
Wow.
And then maybe your lender person contact changed as well. And stuff falls through the cracks when you get a lot of turnover. So maybe they could make an argument that it wasn't so much disclosure as it just was, the process and whatever.
Experience.
Yeah.
Well,
Because when you're all these people doing cold calls, same thing about refis. Hey, I'm going to do an FHA or VA streamline Earl for you right now. And I'm going to save you so much money, but they're not going to tell you that you got to bring cash to closing, and then you're there and you're like, shit, what am I supposed to do now?
Well, any service that is based purely on volume for most companies, you're going to lose that experience and that isolated service that you could get. I heard this the other day as an example for something completely different, but it makes sense now, is when you go to a buffet, like a Golden Corral, the food's not going to be as good as a sit-down steakhouse when you order something specific for yourself. When it's volume based, they're going to not really care. Okay, we screwed up a couple people's escrows accounts, but we closed 100 loans this week. We don't really care about the 2 or 3 that are going to be pissed. But now that 2 or 3 has volumed up to, thousands who are in their second year, third year of their home, where their rate has now gone up because the buy down's expired. Rates aren't low enough for them to refinance. Now their taxes went from $600 to $8,000. Their insurance went from $1,900 to $3,500, and they feel like they were lied to, when in reality they just refused to look at the whole picture. They just looked at that small corner where the picture looked really good, but didn't step back and look at the whole painting, where it's like, hey, you're going to live here past the day of closing. So you need to figure out what those numbers look like in 2, 3, 4, 5 years.
That's also a part of that, meeting with Shawna early on, meeting with me early on. And you understand all that. Like, I have someone who's going into contract today, and we've already been talking about property taxes, but they're a little concerned. They have some extra questions about that. It's like, great. Well, we already have a baseline knowledge of that. So now let's really get into it and narrow it down, right?
Right.
But this brings us to another point that Shawna wanted to talk about was, what does it mean to actually be a broker? All 3 of us are brokers. We're not just whatever salesperson in our specific industry. But Shawna, why don't you talk a little bit about that, right? Because what Greg is talking about is a big versus small attitude. Like, these big companies, they're going to make more mistakes than us as a small company because we don't have thousands of employees out there being unchecked.
Right.
We don't have all these systems that can fall through the cracks. There's a line that I've heard before from former bosses. It's like, just outproduce your problems. Whatever. Who cares about your mistakes? Just outproduce them. And so that's one mentality out there. And that's those people that are hammering phone calls and saying, I didn't do good last month, so now I got to keep going and whatever. So, Shawna, what does it mean to you being a broker versus these other larger shops and bigger brands that, people can easily find on Google?
Right. Well, I have my own boutique office of brokerage, and you're not just a number at King Realty. We, give personal service for each client, and we're able to customize our commission plans and what we can, offer. We don't have a lot of red tape and restrictions that big corporations have, like Remax and other big companies. Our agents have flexibility to really cater to the client, and that's important.
And what about just the one-on-one attention as well? I mean, you're not getting passed off.
No.
Greg, you can talk about it from a broker standpoint. For me, I hate working with certain insurance companies because we need the insurance premium and the policy sent to us so that we can send it to the underwriter to get approved. Well, sometimes it's sent to us and something's wrong. We got to go back to them and get it fixed and send it to us again. Well, if you're working with these large, giant companies, you can't get someone on the phone. As soon as they find out we're a vendor, they put us on hold and never answer the call again. They only talk to the client, which is fine. But when you call in, they're, they answer a different person every time. So, yeah, sure, they're going to say, we're the greatest. We have 24/7 access. You can get with us. But if there's ever a problem, then you got to link like all the 8 different 1-hour calls you've had together, and they're not reading the notes, and now you're doing it again. And so, yeah, sure, it's cool. Someone's on the phone, but if you need care, well, I call Greg. He remembers my conversation from last time, already has it started. He just had to go to the bathroom. Well, now I got to call back after his bathroom break, and I got to start all over again.
Yeah, no, you bring up a good point. I mean, it's the amount of hands that need to touch it from a brokerage standpoint. I'm not saying it stays at just one person, but we have complete control over how many hands need to touch it, how many hands we allow to touch it. So as opposed to a big brokerage or a captive like a Progressive or an Allstate, like the agent may be done with it and then it goes on to a call center. And they don't know who you are. I know what company you're specifically talking about. We both dislike working with this company, but they don't have an agent. They just have a 1-800 number. So you have to explain and tell your story every time you call in, which is not what people want to do. And not that I'm without mistakes. I definitely make mistakes from time to time, but in a situation where I work with you, Mark, you know, you can call me and be like, hey, this is incorrect. Can you just fix this? And it's okay. Yeah, we'll get it fixed real quick.
Or it's something simple like the underwriter saw something on here. We need an explanation.
Yeah, just an explanation. And even if it expands beyond me, you and Trey have worked with my service agent extensively. You know that if she chimes in, you can trust what she's saying because it either came directly from me or she knows what she's talking about. So it's a very limited scope of who touches these accounts.
And the efficiency of it is, it can't be beat. Like we sometimes spend more time trying to get someone to explain why they refuse to email us or call us back than it would take for them just to do the job.
Yeah. Well, we've all been on those emails for a closing. Maybe not you, Mark, because you are a lender. But Shawna, I know you've been on a closing before where the email's going back and forth and there's 13 people on it. And you ask one simple question and all 13 people chime in with, oh, Jeff can answer that. Jeff can answer that. It's like, well, shut up. Just let Jeff answer it. Why is everybody chiming in? Right. Don't answer it if you're not giving me an answer. And who are you? I don't even know who you are. I've only talked to 2 people involved in this transaction, the buyer and the lender. Who are the
Jeff's
other
name
13 people?
Jeff's name hasn't been on this email chain for the last 30 days.
Yeah, and that's compliance. That's volume. That's, hey, we need 1,000 people to touch it because the first person who touched it doesn't even remember what's going on. And that can be a problem. That can cause issues.
Right.
This alone is reason. Go ahead.
It's a lot more time involved. It takes too long to do a simple task.
Well, and technically speaking, as a broker, we're a small company. We want to be efficient. We need to keep it lean, right? Other benefits of working with brokers over the big guys are saving money, right? Not only getting the one-on-one attention and good, solid experience and advice and everything. It's saving money, having more options. But by doing that, we have to be lean, and we outsource things a lot. So a lot of times people will call me like, well, I'm going to use them because they got in-house whatever. It's like, well, that in-house whatever is what we just talked about. Right. We have in-house. Do you have in-house underwriting? I only want to work with a lender that has in-house underwriting. Why? So you can work with 6 different middle managers and not get an answer?
Not cool.
Yeah.
That's,
so doesn't mean anything.
No, and Amazon doesn't even have anything in-house. They outsource everything, and that's why we had a global outage and a lot of people's internet sucks today.
Yeah. That's a whole nother podcast episode.
I know. I don't know anything about that. I'd have to have someone help me out. But but being a broker, that was a big thing, Shawna, we wanted to discuss. I mean, anything else? You said transparency, obviously strategy. For the lending side, we have fewer what they call overlays. So we don't have extra with that in-house underwriting. They have in-house rules as well. That's why they have them in-house, is because they have to learn their overlays and then underwrite to those. We don't have that. So eliminate that whole step. Just the flexibility. Availability too. I mean, these other big places, it's Friday at 5, but really it's like 3:30 and you're not going to get an answer.
Right.
So I hope you're not closing on Monday. So a lot of those kind of things need to go in place, but usually you'd say, okay, well, with that better service, that's buying a Mercedes versus a Honda. I got to pay more, right? No, it's the same, if not less.
Yep.
Because they're charging more over there to have all these departments and pay all this overhead where we don't have that overhead. And we're willing to do a discount because, a number for us is better because we don't have a stock ticker that we've got to go pay.
Right.
All the stockholders. So,
a good job with that client so that they refer us to their friends and family, and hopefully, get us more business that way in the long run. So
yeah, and we make mistakes too. We're smaller, whatever, bigger. Not saying that they're the only ones that make mistakes, but when we make a mistake, we're able to go fix it really fast. We don't have to keep going up different chains and ladders that much or as much. So, but yeah, on the lending side, it was proven 2023 came out in 2024 stats of just how much wholesale lending, me being a broker is what they call wholesale versus like retail. So banks, big online companies, how much we save on a mortgage compared to them. So just because of the efficiencies, we're able to cut costs and pass those savings through the loan to the clients. So, Shawna, what else do you want to discuss? I know we talked about a few things, DFW and
the economy. The Texas economy is strong, and a lot of the headlines are, with all this clickbait that the economy is terrible and job. I understand the job market is not as great as it could be, but here in North Texas and DFW, it's pretty strong.
Yeah, Greg, you want to touch on anything like that? I got some stuff I'll show here on the screen.
I don't know. I don't share the same sentiment. I don't have like a negative outlook on the economy, but I think it's a lot of smoke and mirrors. But I also don't know much about economics, so my opinion really doesn't hold a whole lot of weight, to be honest with you. I think DFW is bolstered by Salina and light farms in that area, and that doesn't really trickle down a ton. I think it's a little bit of a smokescreen, and once all that's built and people realize, oh, I live down the street from Universal Studios, that actually sucks. People in Orlando hate Disney World. So I think it's great for economic growth. It brings jobs, but just leave it east of Arlington, in my opinion.
It's not. I mean, it's coming. Arlington's pushing hard to get another stadium.
Yeah, and it just depends on what gets brought in.
Right.
But with all that, it doesn't matter. I mean, people are going to go where the jobs are. So whether you like it or not, here it comes.
Right.
And it's been that way forever. So this here is a graphic of the difference in 20 years. So 2001 and 2021. This is downtown Dallas.
Mm-hmm.
Wow.
And this is the only photo you could really see like this. But this is the same in any city, in any neighborhood. Look where I live right now. If you do an overhead, my house wouldn't be here, and this would all be grass.
Wow.
And so,
I mean, my neighborhood is all industrial land that's being converted to, master plan communities, and I live south of Fort Worth.
Yeah. So, like you said, Greg, it's all industry and economy related stuff. Well, the housing is a huge portion of that. So, as people move here, there has to be more housing, right? They say on a national scale the demand is there anyway, but what we want to talk about and really highlight is just how different DFW is than the national environment.
Right.
The national environment, there's places with numbers going down right now. So there's people on YouTube saying, "Oh, the next big bubble is about to hit. Here it comes." Well, then you go to DFW stats during the bubble, and it didn't hit as hard here. And it's going to be that same way. We're insulated because of how many people are moving here, all of the demand. So the bubbles is always about supply and demand and everything, at the core of it. And right now, even if something goes bad, the demand's still going to be here. We have so many people that continue to move here that it's going to raise housing prices all over the Metroplex. And even to the outskirts of the Metroplex, properties are starting to become more valuable than ever.
Right. Yeah, Texas is a pro-business state, and I guess it's great with businesses with their taxes, and also it's less regulated than other states. So there's tons of companies moving here, and that's not going to change.
So if we would have bought a house, go ahead, Greg.
I was gonna say, even within the state, though, you can see the negative impacts of that in San Antonio and Austin. They're anticipated to have depreciation of 1 to 3% by the end of next year for a lot of their homes.
Right.
They overbuilt.
They overbuilt.
They went crazy. DFW wasn't able to keep up.
Yeah,
so
that's what I'm
again,
saying. Like it's a hot and cold example, obviously, but like
that's
they're the extreme of the negative
example.
side of it. Yeah,
That's another example of how DFW is going to be better off than a place like Austin, than a place like San Francisco, LA, New York, all these places that are losing population. Plus, their traffic is terrible. Ours is getting bad, but like it's different. Homes are going to keep appreciating here. They have not dipped. They've only not gone up by 10%. Going up by 1, 2, 3, 4% instead of 10 to 20% is not a dip. It's still going up.
Yeah. Well, I saw a chart yesterday, actually last night, and it showed DFW's population compared to states. And if DFW, I don't know what the confines of what they consider DFW, but if our metroplex was a state, we would be the 15th largest state population wise in the entire country.
Wow.
That's a pretty crazy stat.
Yep.
And there's pros and cons to that, and you need to be aware of that, right? One neighborhood might not be as good as another neighborhood, traffic, there's things that come with that. But when it comes to investing your money, real estate is holding very strong in DFW, and it has through everything. So look at this, 2010 versus, just now. If we would have bought a house in college, we would have over doubled in appreciation.
Yeah.
And I believe that that's going to happen again. It might not double in the next 10 years. Maybe it's only 50%. Oh, darn.
Right.
I mean, we lived in a house in college that could sell for way more than it should right now.
Oh, well, but not right now. That is the new norm. It's not ever going to go back to where it was.
Yeah.
No, nothing is ever going to just revert 10 years.
No,
right now, ask yourself 10 years ago, do you wish you would have had those numbers, have that house under your portfolio, under your ownership right now?
Right.
Yeah. Well, then do you think that question is going to be the same in 10 more years when you look back? Do you think you're going to say, oh, wow, I'm glad I didn't buy? Shawna, what do you see from your angle? You talk to people about this all the time, right? There's a lot of buyers on the fence. They're all worried about right now. They forget that real estate is a long game. 10 plus year game. If you're buying it so that you can get rich by Christmas, it's not going to work out.
Right. If they have more than 2 years to commit to living in their home, then they need to go ahead and make the investment and purchase their home. That is basically going to get them more tax write-offs, appreciation, building equity, creating a stable environment for their home or for their family, and create setting up roots. So there's so many advantages that they're missing right now because they're scared. And this is a really unique opportunity while the market is a little bit slower, where they can actually negotiate and have a relaxed experience with the whole entire process. They're not in a bidding war situation. So there's so many upsides that they're missing out on just because they're scared.
And just know that people are saying that a lot right now. Oh, I've got time. I can wait. I don't want to get into a bidding war. If a really good home is priced well, it is getting multiple offers right now and has over the last 3 years.
Right. There's still a few here and there that are happening that way.
So if it's a good home, highly desirable, schools, all the different things, it's getting multiple offers. And my clients don't always get it. And so that is still there. But so it's just a dip right now. I mean, how many times, Greg, have you ever heard someone talk about buying the dip?
Too many people that shouldn't be talking.
But why are they not talking about buying the dip right now instead of saying, following other bad advice of like, let's just hang tight? Why wouldn't you buy the dip? During COVID, and then back in 2008, that's when all the super duper rich people were created, or got even richer, right? Home ownership, I got another stat about that. Let's see here. Let's go to the right there. Average homeowner's wealth has expanded by almost $150,000 in the last 5 years. Home ownership is the number one gap to bridge or the number one bridge to for that wealth gap. So, look at this right here. If you continue renting and waiting, rents are kind of coming down in some areas, but mostly staying the same or going up in other areas because of taxes and things. So it's not like you're saving money. Yeah, you don't have to do maintenance or whatever, but a couple $100 maintenance bill, is that not having that? Is that worth not having $400,000 in 10, 15 years?
Right.
So what game are you playing? Are you playing just the I just got to get through right now, I'm doing 2 jobs, that sucks. Yes, that's a horrible place to be. But if we can start to change the game for you and actually get you into a home and figure some things out, you start building equity. That's how I got out of credit card debt myself, and everything was start to leverage real estate. And so it worked for me, and now I don't have the same problems I had, 6, 7 years ago. But these people that have amassed this $1 trillion of credit card debt, very few of them can actually go into their house and pull equity and help consolidate and whatever else. They got to trust these consolidation companies to not rip them off. Whoops, they're going to get ripped. So, Shawna, I know you have these kind of conversations with people about renting. What do you hear, and what do you think about a graph like this?
Oh, that's amazing. We need to put that out there, because there's so many headlines out there with, all these clickbait with bad information and just, dramatic headlines that are not as accurate as they need to be. So we need to put the narrative that it is a good investment to buy a home. There's not a crash coming. Yes, prices are softening for rent and for sale, but that's just an opportunity that would allow them to maybe get a little bit more concessions and more things in their favor that they're not realizing.
How long would you say buyers think that the market has been bad for them, that they need to wait? 1 year, 3 years, longer? Like
probably
when?
2 years, probably 2 years. And
okay, so 2024 and some of 2023 would count, right?
Right.
People think that it was not a good time for them to buy.
Right.
Well, look at this chart right here. In those years, they would have missed out on 11% appreciation.
Yep. The longer you wait.
So yes, everybody right now, they think the normal is 10 and 19% appreciation. That is not the norm.
No.
It's single digits, but when it's good, it's double digits. It's no different than the S&P and whatever else everybody follows on the markets.
Right.
They go crazy, they dip and they lose money. My dad complains all the time. And so look at this chart though. This is 83 years. So many times in 83 years, people have cried wolf and said that the sky, or Chicken Little or whatever, and the sky is falling, right?
Right.
But look, the sky only fell once, and it only fell for a little while.
And in Texas, it really didn't crash. The prices went a little down, but it wasn't a huge crash like in other major markets. So we are, like you said, we're insulated here in Dallas. So, this is probably the down market, and this is how it's the lowest it's probably be, and it's only going to go up from here.
Yeah, and some of these other stats, like you said, the houses are sitting a little bit longer. Well, during the bad times, like 2011, they were sitting for almost 100 days. And right now, let's see, we're only at like 44 average days on market. So right. I think that 44 is just a normal amount of days where you don't have to panic and freak out and overpay.
Exactly.
Buy the dip. Buy the dip.
You can take
what happens when,
make sure you buy it before you have to make a decision. It's just a better experience right now for buyers.
So Greg, you talked about Universal Studios and all this stuff going on in Frisco, Collin County, McKinney. Well, on our side, you've got, they're trying to make it the new Hollywood with all the production stuff going in, and the Alliance area. And think about what other industries are coming. Caterpillar just moved here last year. Like there are so many different. Obviously over there, Richardson was State Farm was a big move a few years ago. So there's so many things that are coming in. that we have people coming with really good, strong incomes and jobs, and they don't want to rent. They want to buy, they want to gain equity. And so they're coming. And if you're here and you're waiting, and you're going to get priced out. So like you said, it stinks, Greg, and being in California and stuff like that, where it's, it's packed. But if you have a home in California, that's your investment vehicle for retirement. A lot of people, when I lived in San Diego, one house was what they used for their entire family to kind of get through.
Yeah, and we've had this discussion before. My parents lived in that house for 40 years. They've refinanced it, paid for college, paid for private school, paid for cars, paid for kitchens. That's another vehicle that I don't think is talked about a lot. Everybody wants to treat a home as a sale. I bought a house this year. I want to sell it for more on eBay, make my money, and keep tearing up like Pace Morby and Grant Cardone. We're all just taking money for that stupid course when you can just Google how they do it. You still have to have a place to live. Is it an investment vehicle? Absolutely. But investment doesn't mean you're going to flip it in 90 days and be a millionaire. I think that's what's clouding the consumer space, is everybody thinks that if I buy a house at 20, I'm going to be a millionaire by 25. It's like, no, you still need a place to live. You don't want to be homeless, right? So just buy something that's safe, that's going to appreciate. When it's time to sell, you're going to see that it's a great choice. Don't be a real estate influencer who just wants to flip homes. That's not the world we live in. That's not the norm, right? I'm not a professional athlete. Mark, you're not either. But we still played baseball when we were younger. We still played in college, knowing that we weren't going to get to that other level. You can still buy a house knowing that you're not going to be a billionaire. Like, you might just live in that home and raise your family, refinance a couple times, pay for college, have something to pass along, sell it maybe when you're 65, make
and
money.
Still have a really strong budget all throughout that allows you to do stuff.
Exactly. Like, you don't have to. People who, I think it's just the recency bias. Like, me and Mark have talked about this a lot, Shawna, where it's like, how far away from 2% and 3% interest rates do we have to get before people forget they happened? So far, we're 3 years past it, and people still are waiting for it to happen again. It's not going to. Mm-hmm. People forget that, we were in a really bad spot for them to get down in the twos. Do we want to relive that? Everybody's pissed and wants to bitch and moan about how life was when they were in twos and threes. But nobody wants to talk about how that would have to happen again in order for us to get back there. They think it was just fine and dandy and everybody's having a great time. We could go anywhere. We didn't have to wear a mask. The economy wasn't shut down. Everybody thinks that, no, it was just a perfect world because they only want to focus on the interest rates and the real estate market, how it was just a good time to buy. Well, okay, we're past that. Find the next good time.
Exactly.
Yeah. Think about buying, and then when things do get crazy again, let's say that they're right, and one day it comes back into the 3% rates. Are you ready to overpay for a house in cash that doesn't go toward your equity because you paid over appraisal value? Those people that did that are not doing well right now. The market has things in place from 2008 to protect against that. People that are underwater now is because of other extenuating circumstances. It's not because they bought and have just totally tanked their values by 50% for the market. That's not happening. People that are losing their homes, foreclosures and things, unfortunate things have occurred in their lives that have nothing to do with the markets. So if you've got a pretty strong grip on your situation, your budget, and the numbers work for you to buy a house, then you're going to see these three things right here. Appreciation. Amortization just means equity, right? Every time you pay a payment each month, you're buying down your loan, you're creating more equity. And then don't forget about tax benefits. You have different things that you can use to help bring in more money at the end of the year too. So there's a lot.
And you can write off your property taxes. And if you write down the rate, the discount points, you can write that off as well.
So that's, you get a little bit of money back. A lot of people in politics, and then I even just got a letter here. These tax protest people are already sending out their mailers, letting everybody know how many thousands they're going to save you, or hundreds or whatever. But that's not per month. Remember, that's just an aggregate. So you got to divide that by 12 or however much. So they're really only saving you $4 a month the way that they do it. Do it yourself and you can save some legit money. But it's, you know, just make sure you understand the real numbers. That's the whole thing about what we want to do, all three of us as advising people, is the full picture. Don't take the headline bait.
Right. Yes. It is a good time to buy. It's a strong economy. There's plenty of jobs out there for people that want to work.
This is another thing too, right? These people in the credit card debt, they're all stuck. We've heard about this a lot, right, Greg? You just said they're stuck in those 2s and 3s mortgages. Well, but your credit cards are 24. Well, this is low. It's really like 30+% for people who have a lot of high credit. You know, you go get a car loan. Those haven't been cheap, but you've been slinging cars over the last 5 years, no problem. And then you've got personal loans. I talked to a lot of people who have personal loans. Well, geez, you should go find a different way to do that. I mean, but now you're with all that debt and the different balances, like this is just a random example, but you combine all your mortgages and at 4% anymore, your total debt is at a higher number. So that blended rate is something that you might hear a lot about, especially in like coaching on our side, on the sales side, but it's true. Think about your total debt, and we got to come up with a plan to get rid of it. That's why we start a year in advance or however long in advance and get you ready to buy. And then you can actually start to really see the whole picture happen. But this is a powerful tool to really think about. Like if you're stuck on the 3%, but you're drowning in credit card debt and your credit score is going down, that 3% is no longer valuable.
It won't matter.
Correct. Shawna, let's have you talk about your chart that you sent me. Because it's kind of the same thing, right? I mean,
yes, it breaks down the pros and cons of buying versus renting, and it goes through all the advantages that you get when you buy. You get to write off the property taxes and the interest that you're paying on the mortgage, and it just goes through when you break even, how long you need to stay in the home before you break even. So usually it's 2 years or 2 years and a couple months. And then you break even, and then after that, it's just building more equity and appreciation, and it's a better investment if you can commit to more than 2 years. So that breaks down.
And you don't have to live in it the whole time, right? I mean, as long as you live in it for the proper amount of time, which might be a year or something, let someone else pay for it for you.
Yep, you can rent it out. It's rental income. So,
which now we're talking about a ton of tax implications to try to bring in some more money. So, you know, right now I'm talking to people about refinancing. So that was kind of the point I got derailed myself earlier was you can buy now when there's no competition, get the sellers to buy some things, right? This is where the DRs and the builders are doing a good job is they're bringing people's monthly payments overall down. You're getting into a home, you're starting the process. You're starting the 4-year clock, the 2-year clock. And then you can refinance later, and then it gets even better from there. But if you wait until later, then everybody else is in. You got to pay a little bit extra. You know, the whole thing you've probably heard a million times. But it's going to be a lot easier to refinance later than it is to buy later.
Right. Yeah, you can't go back in time and change the price.
Just
prices are
at no point really truly has the inflation ever gone like this and then just all the way down and found a new level down here. Inflation's always like this.
Yeah.
Greg or Shawna, you guys got anything else you wanted to talk about? Shawna, I tried to hit a lot of the things you're interested in. The only other one I think that we probably didn't really talk about a lot, maybe Greg can mention something here, but like just misinformation and these buyer fallacies. So everyone calls it, I want one of those first-time home buyer programs. We kind of talked about it with the grants and stuff, how it's exchanging money for a higher rate or a higher payment or something. But there's just not a lot out there truly that is like, there's no such thing as free money.
Right.
So Greg, was there anything else or Shawna that you guys wanted to cover just about the market, about yourself as a broker, what you're seeing?
No, we just want to encourage people to get off the fence and don't be scared. The market's good right now for buyers and sellers. You just have to be disciplined and you know, sometimes creative, which we are more than happy to do whatever it takes to get it to be a win-win for everybody. So it's really a great time. And we don't want to be kicking ourselves in 5 years that we didn't buy right now, because now is a really good time to buy.
such a good example of someone who wasn't scared, got off the fence. 2 years ago when the conversations were tough and he didn't know what to do, he took over 7% interest rate. He barely made it work with the amount of money he had in his pocket and was just trying to get by. He's got a family and bought the house. His payment over the last 2 years went up because of the escrow analysis and those shortages everybody gets calls about, and kind of got the raw end of the deal because they didn't apply his homestead like they should have. So a lot of things went wrong. His payment was just going up, but he kept making it work. And now that we've got him refinanced, we've kind of found a new level, saved him over $700 a month. So he's a prime example of that dumb saying that I hated of date the rate and marry the house or whatever.
Right.
But it can work that way if you stick to the plan. He didn't panic. He stuck to the plan. He worked hard. He did everything he was supposed to do. And he is in like smooth sailing now. And there's a lot of opportunities of people to have those same kind of stories and are starting to see real equity. You can take those savings and dump them back into your mortgage, pay it off in half the amount of time, all sorts of different things you can do. But they took the jump and took an over a 7% interest rate to buy the house they wanted. That house that they wanted wasn't going to be available if they didn't take that 7% interest rate.
And you refinance in a year?
2 years.
2 years. Yeah.
For him. Now, other people, there's going to be more opportunity to refinance sooner because of the timing. They caught the tail end of the higher rates, and now they're catching the beginning of the lower rates, maybe, so there's some opportunities already for them. Whereas the other people, it took a full 2.5 years for the markets to catch back up, but they created equity during that time.
Right.
So it's out there. Opportunities are there, but you cannot compare yourself to the worst times in the markets, like Greg was saying. Greg, anything from you? It's just been a lot of yelling and screaming about numbers.
No, I mean, the insurance market's softening, so it's good news.
That's helpful because there's been a lot of headlines with insurance being sky high.
Well, I mean, if you think about it, people are just overreacting. If you think about the benefit of the insurance policy, if they're charging you 1% of your purchase price, that's pretty good. And it's forcing, right now, the increased cost is forcing people to take care of their homes, as opposed to like the 70s and 80s. The boomer generation just didn't do anything to their houses. That's why you're seeing houses on the market now that look like they're fresh out of the 70s. It's like, are you serious? And that roof's 30, 40 years old. It's like, you got to be kidding me. So it's forcing
that is
people
something
to
watch. That's absolutely something to watch, boomers.
Yeah. So it's just taking time. And I tell people all the time, more so on the commercial side when I'm dealing with businesses and commercial properties, I don't want to hear you say, well, so-and-so pays this much, that's lower, I think mine should be lower. Well, with that logic, I can point to a client that pays more than you. So should I charge you more?
Right.
I don't know why we're comparing somebody. That's not you. That's not how this works. The clients don't like that, but it's a reality that they need to understand. If you're going to compare, I'm going to compare. So which comparison do we want to take? But in the home market, insurance is softening. You're going to have to, you're going to take higher deductibles, things like that. But you just have to be aware of that. It's going to force you to save more money on the front end before you buy a house, rather than, it's going to cost you $3,000 to replace the roof. Now it's going to cost you 6 or 7. Just understanding that going in makes you that much stronger in that process.
So what is the deductible for a roof?
So in Texas, it's pretty much a standard 2%, but a lot of companies have gone to 3 at DFW because they get so much hail. So, you're looking at $9,000 to $12,000 with the 3% deductible out of pocket. And people want to just ride with that rather than spending an extra $200 a month on something else, because they want their payment to be low. And in reality, if you get hit by a hailstorm in that first year, how are you going to pay for that? It's against the law for roofers to eat that deductible for you. It is 100% against state law for them to do that. And myself and other brokers will turn roofers in. because they are forcing prices to go up by eating people's deductibles and breaking the law. It's a cycle. It's a snake eating its own tail. If you guys want to save money elsewhere, it's going to cost you more somewhere else.
Right.
So it's all getting corrected right now. But people have to be aware of that. If if you're out of cash at closing, after closing, what happens if a tornado rips that roof off your house?
Right.
You need money to be able to replace it, or else if you don't replace it, you're going to get foreclosed on. If you don't have insurance, they're going to force place it. And if that force place is too much for you to be able to afford and you miss payments, you're going to get foreclosed on. I mean, it's a rare reality, but it's a reality. So it's not just I can afford the house, so buy the house, and now I'm without cash, without any money. No, you got to have 6-9 months to a year worth of runway, and that's just about being smart. You don't buy a car. You don't buy a car if you don't have gas money.
We call those reserves on the mortgage side, right? So that's part of what we plan for.
Mm-hmm. So that's just our world. It's getting better, but more than getting better, people are realizing that this is just what they have to pay.
Yeah.
So they should
All right,
have
we've done.
2% deductible.
What was that?
One more time, Shawna.
They need to have 2% deductible. Just have that figure in savings for an emergency, right?
Yeah,
Ideally.
I mean, yeah, because your home's never going to be insured for what you paid for it. It's very rare it's going to match, which is also another learning curve for buyers.
I would argue against a lot of these gimmicky programs that you're getting cold called on as well. Like, they don't take into account some of these other things. So they're giving you money. You're going to go buy a home with nothing left in the bank, hardly enough to make your first payments. What if something does go wrong? There are things that you need to pay attention to in a home. Your home doesn't just go up, by double in 10 years without keeping the maintenance.
Mm-hmm.
There is work that you have to do. Over 10 years, you could become really good at something, but you have to train. And so there's no difference in any kind of investment as well. You have to keep it up. You cannot have all this deferred maintenance. Otherwise, you're not going to get $150,000 to $300,000, net for yourself, because they're going to have to subtract all the stuff you were supposed to have done.
Yeah. I mean, yeah.
So home ownership on what?
I said I have countless examples of people just not being smart with those calculations, and then insurance gets too expensive and their escrow goes up and they opt for a different insurance plan to keep the monthly payment down, and then something bad happens. They literally cannot afford to fix it.
But once again, don't get scared. Just prepare earlier. Yeah. Understand these things, have the conversation, ask the what if questions, and then you'll know for sure how it's going to go, and there won't be any surprises. The only surprise would be, an actual hailstorm, but you're prepared for it.
Right.
So, all right, well, we've gone on for a while here, so it's an easy topic to talk about for me, numbers and stats and stuff. But Shawna, we really appreciate you taking time to talk with us.
Appreciate it.
We'll try to we're going to put it on my YouTube channel. We'll put your links in there so people get a hold of you. Okay. And it's just really important to make sure people make informed decisions.
Yes, absolutely. Thank you so much for having me.
Okay, thanks, Shawna.
Bye.
Thanks, Shawna.
Nice to meet you, Greg.
Nice to meet you too.